If you are over 65 and still paying the full property tax bill on your home, there is a chance you are paying more than the law requires. Not because you did anything wrong, because property tax relief is usually not automatic. You can turn 65, own the home, live there for decades, and pay every bill on time, and the county still may not apply the senior exemptions unless you file the right forms yourself. That is what most people never get told. A mortgage can end. Property tax usually does not. And with the average property tax bill on a single-family home now around $4,300 a year, this is not a small issue. If you stay in your home another 20 years, that can mean tens of thousands of dollars leaving your pocket. But there are 5 forms that can lower, freeze, refund, or delay that bill. Today, I'll walk you through each one. And stay until the end, because even people who qualify get denied for one simple reason. They file the wrong form or forget one required document. The first form is the one everything else depends on. Form number 1 is the Homestead Exemption. This is the gateway form. It tells the county that this house is your primary residence, not a rental, not a vacation home, the home you actually live in. Once it is active, the county may remove part of your home's value before calculating your property tax bill. For example, if your home is assessed at $300,000 and the homestead exemption removes $50,000, you are not taxed on the full $300,000 for that part of the bill. But here is where people get caught. They assume they already have it. They think, I've lived here for 20 years. Of course the county knows. The county may know where you live. That does not mean the exemption is active. So your first step is simple. Go to your county assessor, appraisal district, or property appraiser website. Look up your property record. Find the section that says exemptions. If you do not see homestead, call and ask, is the homestead exemption currently on file for my property? If the answer is no, ask what form you need, what documents are required, and what the deadline is. This one form can open the door to the rest. Once that is in place, the senior exemption is next. Form number 2 is the senior property tax exemption. Some places call it the age 65 exemption. Some call it the senior citizen homestead exemption. The name changes, but the idea is the same. Once you reach a certain age, often 65, your home may qualify for an additional property tax reduction. But do not assume this happens automatically. And do not assume you make too much money to qualify. Some senior exemptions have income limits. Some do not. Some apply only to school taxes. Some apply to county or city taxes. Some require annual renewal. Some stay active once approved. The only way to know is to ask. Do not call and say, do seniors get a discount? Ask this instead. What senior property tax exemptions are available for my property and which ones require a separate application? That phrase matters, separate application, because the homestead exemption and the senior exemption may be 2 different forms. A lot of homeowners file one and think they are done. They are not. The senior exemption can lower the bill, but the next form can stop the bill from climbing. Form number 3 is the senior freeze, senior assessment freeze, tax ceiling, or property tax reimbursement program. This may be the most valuable form on the list. A normal exemption lowers part of your taxable value. A freeze or ceiling tries to stop future increases. And that matters because many seniors are not in trouble because they bought too much house. They are in trouble because the house they bought 25 years ago is now assessed like a house they could never afford to buy today. The home value went up. The tax bill went up. But their income stayed mostly fixed. A senior freeze can help with that. In some states, it freezes the assessed value. In others, it limits part of the tax bill. In others, it reimburses increases above a base year. Different names, same basic goal, Stop the climb. When you call, use all the names. Do I qualify for a senior assessment freeze, senior tax ceiling, tax cap, or property tax reimbursement program? Ask when it starts. Ask whether you need to renew every year. Ask whether income documents are required, because every year you wait may be another year where a higher value gets baked into your tax bill. Now, the fourth form is easy to miss because it may not come from the county at all. Form number 4 is the circuit breaker credit. This one is different because it is often handled by the state, not your county assessor. A circuit breaker looks at your property tax bill compared with your income. If the bill is too high relative to what you bring in, the state may give you a credit or refund. This can be especially important for retirees living on Social Security, a pension, or limited savings. But many people never find it because they only search the county website. The county may not mention it. Your property tax bill may not explain it. And if you do not normally owe much state income tax, you may assume it cannot help you. But in some states, it can still put money back in your pocket. Search this exact phrase: your state senior circuit breaker property tax credit. Then check who qualifies, how to file, and whether it is refundable. The fifth form does not lower the tax, it delays it, and for the right homeowner, that can matter. Form number 5 is the property tax deferral. A deferral does not erase your property tax, it delays payment. If you qualify, the state or county may allow you to postpone property tax payments. The unpaid amount usually becomes a lien on the home and is repaid later when the home is sold, transferred, refinanced, or passes through the estate. So this is not free money, but for some seniors, it can be the difference between staying in the home and being forced to sell. This is especially important for someone who is house rich but cash poor. Maybe the mortgage is paid off. Maybe the home has value, but the monthly income is tight and the property tax bill keeps eating into savings. Before using a deferral, ask, what interest rate applies? When does repayment happen? Is there a lien on the home? What happens if I have a mortgage? Do I need to renew every year? A deferral is not right for everyone, but if the property tax bill is threatening your ability to stay in your home, you should at least know whether this form exists. Now, here is the reason qualified homeowners still lose these benefits. Most people are not denied because they are trying to cheat the system. They are denied because they file the wrong form, miss the deadline, forget income proof, or fail to renew. Homestead exemption, senior exemption, senior freeze, circuit breaker, deferral. These can all be different programs, different forms, different offices, different deadlines, different documents. And if the application asks for proof of income and you do not attach it, the office may not call you to fix it. They may simply deny it. So before filing anything, gather proof of age, proof of ownership, proof the home is your primary residence, your latest property tax bill, your parcel number, your prior year tax return or income documents, Social Security, pension, or 1099 statements if required. Then call and say, I want to make sure I am applying for every property tax exemption, freeze, credit, reimbursement, or deferral available for my home. Can you tell me every form I should file and every document I need to attach? That one question can save you from filing one form when you actually needed 3. Here is your action plan. First, check whether your homestead exemption is active. Second, ask for every senior property tax exemption available in your county. Third, ask specifically about a senior freeze, tax ceiling, cap, or reimbursement program. Fourth, Search your state's senior circuit breaker property tax credit. Fifth, if the bill is still too high, ask about senior property tax deferral. Sixth, confirm the deadline and required documents. And seventh, ask whether you need to renew every year. Do not assume the county will tell you. Do not assume your mortgage company handled it. Do not assume your tax preparer checked. And do not assume you make too much money to qualify. You worked for the home. You paid for the home. You should not be paying more property tax than the law requires. Sometimes the difference between paying the full bill and keeping thousands of dollars in your own pocket is one form, filed on time with the right documents attached. So before the next bill arrives, check the record, make the call, and ask for the forms by name.